Good morning, everybody. Welcome. We'll give everybody a couple minutes to file in. Thanks for joining us. Good morning. Yeah, Hyperboard. We're trying to figure out what's the best option for that. So we'll let you know. All right. It is 9:02. Let's go ahead and get started. So welcome everybody this morning. This is Michael coming to you from Game Edge on December 15th, Monday, December 15th. As we head into the OPEX for the week. As always, here at Game Edge for the pre-market prep, we'll cover our three pillars, sentiment, structure, and trend. Good morning, everybody. And then we'll cover some individual equities. If any tickers, if anybody wants to go over those, you can throw those in the voice chat. So we'll go ahead and jump right into our market trend model. Obviously, this is based on the tick index. Again, this is just buying versus selling in the overall market. We are debuting a trading view tick that's based on our market trend model. It's not 100% accurate, but I know a lot of people have been asking for trading views. So that's rolling out to our members also. So we have the version kind of 1.2. We're getting feedback from our members about that. So if you're interested in that, you do have to be in our Discord to get our trading view tick for that, as well as our Thinkorswim scripts. So market trend model. Again, we saw some weakness into Friday. The bolded white line is our cumulative tick, our intraday instantaneous CT. Again, showing buying versus selling in the overall market. Again, railroad track here. These are shorter term moving averages. If you're under these areas, then if you're a shorter term swing trader, 0DT or 1 to 3 day, you would want to be a little bit more risk off and cautionary. If you're above these, you want to be a little bit more bullish and risk on. And then our colored ribbon is our longer look back period. Red above cyan is still indicating that our mechanical portfolios are turned on, and we'll be entering those positions, putting capital to work from a longer term standpoint. Breadth indicator on Friday was actually not horrible. New highs versus new lows. Green was above red, but distinguished from previous days where they were significantly to the upside, indicating more stocks were being bought than sold. And our filter cumulative tick, this is institutional plus 1,000 minus 1,000 larger block orders, was definitely to the downside on Friday, so indicating institutions were a little bit more risk off. So we'll watch this historically. Once we had a significant run to the upside, usually we will see some consolidation and pullback. As long as we stay above the colored ribbon and do not slice through it, then we'll still be in an overall bullish state and looking to put capital to work back to the upside. And then on a shorter term time frame, if this bolded white CT starts crossing above these shorter term moving averages, we'll move to a more progressive exposure for increasing our long exposure to the overall market. All right, moving on to the SPX options complex. Again, we separate the SPXA from the SPXP. SPXA is your monthly expiries. Obviously, as we head into the month of expiry this week, again, this is institutional or larger market participant money. We're still call dominated above and below spot price, but you see transition area there at 68.70. Again, above that area would give us an opportunity to move up towards 6,900. If we're within the transition area, it'll probably be a little bit more choppy. Still supportive on any pullbacks, though, as we have in the money calls below us. And then we'll be watching the downside, 6,800 to 6,780. If we lose that area, we'd be a little bit more cautionary down towards 67.45, and then below 67.45, we'd anticipate some more weakness just structurally in the overall market. All right, let's moving on the SPXP. All expiries turned on via our web app, again, indicating here that we are put dominated now. Transition area is a confluence of the GEX and DEX transition at 68.45 and 68.50. So staying above that, we'd have a little bit more supportive, favorable tailwind for the price appreciation in the overall structure of the market for a move up towards 6,900. If we're below the transition area, we'd be a little bit more weak. Obviously, we start capturing some of those out of the money puts below us. We are already put dominated. So again, increasing the negative delta in our book overall structure and our book, and then dealers would have to sell there to hedge that again towards the 6,800 level. And then you see some in the money calls there that would most likely be supportive, as well as the charm there. So really that transition level is tight, concise, well-defined, whatever definition you want to use. So above, we're bullish, and a little bit more looking for upside towards 6,900, and then below it would be slightly more cautionary. Pull back down towards 6,800 would most likely still be supportive type action. All right, moving on to the SPXP GEX ratio. Again, this is indicating short-dated call gamma versus short-dated put gamma. We discussed this last week that we were basically seeing it sideways with the moves up, and then on Friday we actually saw a decrease and a slight negative slope in the overall GEX ratio. So again, indicating that short-dated put gamma was coming into the overall complex, and we're still slightly we're at 0.98, so we're at that 1 level. Again, above 1, bulls are still maintaining control and call speculators. Below it, the bears start trying to exert a little bit more force, and the put speculators start to take over a little bit. So again, we're kind of at a transition point within this pullback of the SPXP. We'll continue to watch this day over day. All right, moving on to the SPXP delta balance. Again, we separate the overall structure from what we call the right-hand plane and the left-hand plane. So left-hand plane is below spot price. Right-hand plane is above spot price. And then the blue dotted line is your aggregate. Again, red dotted line is left. Green dotted line is the right. We spoke about this last week, that out of the money call speculation was kind of not keeping a pace and starting to degrade a little bit. So again, spot price appreciation to the upside above 6,900 was most likely going to be difficult. And then we saw that come to fruition heading into today. The right-hand plane green dotted line there has a significant negative slope. So again, out of the money call speculation start continuing to drop. Left-hand plane is still in the money call dominated. We're slightly above the 0 line. So again, that will still be supportive, but your delta balance now is also below 0. So again, cautionary and a weak structure standpoint for the bulls, and for the bears, it's a little bit more advantageous for a pullback to the downside if we see the structure or the intraday, call versus put speculation indicating that. And then after, as we head into the expiry, we do see some weakness, but then a slight rebound, and then into the Friday expiry, again, delta balance, again, indicating that we are rebounding towards the upside. At least with the overall aggregate, and then the right-hand plane indicating some out of the money speculation into the 17th. And then we start to see that trail off a little bit. Left-hand plane, again, picking back up to the upside. So we do see some opportunity for some bullish action into Friday, into the expiry, but we may have some short-term weakness from now at least until Wednesday. So we'll continue to watch this again to see if this changes throughout the multiple days here, Monday, Tuesday, Wednesday, as we get ready to head into the Friday expiry. All right, moving on, the SPXP net stack command. Again, this is the highest sensitivity levels for today, 6,900 to the upside. We do have some in the money puts, but you can see it's not as large as the in the money calls to the downside. That will continue to be supported below us towards 68.25. And you see the charm level 6,800 and then 6,900 to the upside. Again, out of the money calls, these will continue to be a headwind as long as we're below 6,900, but not a significant change or not a significant difference in the left-hand plane and right-hand plane. Again, 6,800 to the downside would be supportive of those out of the money puts. And then we see those gamma levels where we actually hit the gas or accelerator for the upside or the downside. And then net Vanna, again, slight edge to the right-hand plane. So if we do see volatility drop and we see out of the money calls come in, we could see a move up towards 6,900. So again, key areas overhead, 6,900. I think that's very well entrenched. And then we'll watch the transition levels to the downside. And then if we do see some weakness, we see supportive type action down towards 6,800 and then 6,825. All right, moving on to the 0DTE via our web app. As I already discussed today, transition areas are slightly a little bit wider, but they're very concise and well defined at 68.50 and 68.30. So again, important area to stay above. If you're a bull, you see those puts overhead for the put domination as well as the charm. So upside speculation will most likely be difficult, again, unless we see a sentiment structure change. 68.60 overheads, the top of DS as well as PGEX. Again, we saw some stalling pre-market already into that overhead level. We'll check that in just a minute. And then to the downside, you see these arrows These would be the overall trade plans that we'd be looking for if we're within the drunken sailor range. Extremely choppy price action. Below drunken sailor in transition, you'd be looking for a short down towards 6,800, and then obviously above 6,860, move up towards 6,875, and then 6,900. Again, this would all have to be predicated with the market trend model, again, indicating that speculation is continuing to the upside, as well as our volume command, our volume analysis. The call versus put speculation would both have to be indicating that out of the money call speculation was coming into the complex, and market participants were speculating to the upside. So we'll continue to watch that intraday and see how this plays out. Let's move on to our trading view chart. So already we're creeping above the 6860 level, as I just discussed. So that's an important area to stay above. We anticipate 6850 to be supportive. Transition areas here, and then we'll have to watch the out of the money call speculation to the upside to see if we have that overall a drive or push up towards the 6,900 level, as well as the market trend model. We definitely want that to be in confluence with the overall structure and sentiment speculating to the upside. So with that, thank everybody for joining us. Again, you can go to gameedge.us. Sorry about that. Let me punch this in. gameedge.us. Click on newsletter. Put your email in, and you'll be delivered this Beyond the Bell newsletter on the weekend. Again, it indicates all of our trading strategies, how we look at the SPX option structure and navigate it, as well as our free courses. Check those out. Game Edge Fast Pass, flagship education course. Check that out. And again, our blog has tons of education articles that we discuss in the morning, as well as post on X that we discuss about our key tools and how we look at the overall market. So make sure you check those out. So with that, I think we've covered everything I wanted to cover this morning. If anybody wants to look at individual equities, I'd be happy to look at those in our web app for a couple minutes here before we get ready to head into the open. But key level 6850, 6860 overhead as we head into that open for any pullback area. And then within the overall transition and drunken sailor range, we'd anticipate that to be choppy for the day. So thanks everybody for joining us. Again, like and subscribe on X and YouTube. You'll be notified when we go live, and we'll be able to get you interacted with our overall Game Edge ecosystem. Be happy to have you in our Discord also. So let me know if anybody wants to go over any individual equities. I see quite a few posts on Tesla this morning. Yeah, thanks Butch Chad for joining us. Again, Tesla still looks great from an overall structure standpoint. We're still call dominated. We're above the transition areas. Speculation to the upside is still at 500. I think we've continued to look at that over the past few weeks. So PGX is up towards 500. This expiry here, we see PGX at 500 also. So speculation still to the upside by market participants. And you can see the in-the-money calls really entrenched below us. Good morning, Dave C. So pullback should be supportive as we head into this expiry. And then after this expiry, again, we still see the structure conducive of upside speculation towards 500 and very well supportive back down towards 450 and 440. So Tesla still looks great from an overall structure standpoint. So, all right. All right. Thanks everybody for joining us. Again, key areas this morning, make sure you're watching 6860, staying above that into the open, as well as 6850 for a pullback area, confluence of full expiry and 0DT positive transition area. All right. Thanks everybody. As always, manage risk, and we'll see you later.